For usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Getting a lot of questions about the Ichimoku Cloud indicator. Let's do a quick FAQ. What the most common things I get asked. First is obviously how do we put it on the chart? Go to indicators, type in cloud. It should be the only thing that pops up there on TradingView. On Kraken Pro, you can also find it the same way, indicators, cloud, and it should be the first thing that pops up there. Next thing you want to do is change the settings of the cloud in the cog there under inputs. I prefer an adjusted set of settings based on crypto back testing. Some people do not like that idea. Some people like using default. That is totally fine. If you use default, the principles are still the same based on what I talk about, based on what I look at. I prefer less entries and exits and a higher signal, less noise. That's why I use the crypto settings. I've used them for a decade, over a decade. I'm not trying to get you to use them. I'm just telling you why I use them. Use whatever you want. I don't really care. Use whatever makes you money. But if you're wondering why my clouds might look different, this is why. So 2061, 2030 is what I use on the crypto clouds. Basically, it's a higher data capture than even default doubled because there are more days of the week in the trades. There are more days in the month, 30 days typically rather than 26 trading days or 24 trading days or whatever it is, right? So that's the main rationale. I think why it actually works is because it takes in more data than 926, 52, 26. That's not to say most of the time you won't get the same signals, but I've found that I like 2061, 2030 better. For legacy, for non-crypto, anything non-crypto, commodities, stocks, whatever, I just double the legacy settings. I just want to see basically 2 time frames higher than what you're looking at typically. So instead of the daily, you're actually looking at the 2-day cloud. Again, more data capture, fewer entries, fewer exits, generally more signal, generally less noise. This isn't always going to work out in your favor, but more often than not, once you bounce between all these settings, you will find the higher settings generally are better for most people. Much like moving averages, people use all sorts of moving averages, 1050, 5200, 140, 1400, whatever you want to use. That's all we're doing here. We're adjusting a type of moving average. So you got the cloud, you've got it on your chart. I changed things a little bit. I thicken up the lines a little bit, changed the background a little bit. It is my predominant indicator, so it's very dominant on my charts. If you don't like that, you can obviously dial that back a little bit. As far as what we're looking for on the cloud, the reference point is almost always going to be the daily. The daily is going to set the true north for what you're looking for. Above the cloud is bull territory. You are only looking for longs in that territory. Below the cloud, you are looking for shorts. You're looking to sell. Generally, what you'll find on the daily with these settings, we have extended periods of down or up. Crypto is very trendy. It trends very hard when it trends throughout the years. You will generally get very few exit signals based on the cloud alone, based on price position relative to the cloud, using the daily on Bitcoin when we are trending. And when we are not trending, it's really a sign to do nothing. Stop trading. If we're not trending, if your trend metrics aren't clear on any chart, any time frame, alts, whatever, you will find you'll have a hard time figuring out what's going on. So the cloud does a very good job setting the tone. Is there a trend? Yes or no? Is it bullish or bearish? The TK cross, the lines, the red and the blue lines on my chart, are trend strength within that litmus test for trend. So what you always want to see, if you're bullish, price of a cloud, bullish TK cross. Anytime you first see price cross above the cloud, that is typically an entry signal for this system. On many charts, you will find you don't really get many of those entry signals, and that's a good thing, in my opinion. You want extremely little touch points here. We want a few entries. We do not want an entry every other day. At least I don't. Okay. I want entries every once in a while. I want exits every once in a while. Looking back at the past couple of years, sometimes it's choppy, sometimes it's terrible, sometimes it's great, right? The cloud doesn't know. The cloud doesn't know the future. It's just telling you based on past price action, price above the cloud, go long. That's what it's telling you. So you do have to know the general cycle outside of this. Is it a great time to go long in 2022? Let's take a look at the cloud. No, the entire time, the entire year we were below the cloud. First below the cloud in 2021. So if your trend metric is giving you false entries here, you probably need to adjust something. And just for fun, if we turn on default daily, you do get one false entry here. So it's not completely terrible, but I much prefer the comfort of the slowness of this. Okay, this takes a long time. So that when this does happen, it tells me, yeah, I'm sure, I'm very sure, and I should pay attention. I need to pay attention, okay? And it's not about whether or not this is bullish continuation or not. This is about being on the right side of the trend at the right time, giving you the optimal entry. Let's say we go from here to 100, okay? This is the same type of entry as it was at 65 twice now. Really all 3 times it's been a long entry up here. Just like down here, long entry, long entry, long entry. It's just it's literally pulling you back into the trend, Yes, this was wishy-washy up and down on the daily a couple times, right? But if you're listening to the cloud each time, you're back in. So it's a checklist. It's a checklist for affirming the trend. Above the cloud is the first part of the bullish side of things. Another common question I get, okay, everything else is bearish. We're not there yet. What do I do? Right? Well, you dial back the leverage, you dial back the sizing, you dial back the confidence in direction until you're sure and the checklist says you're ready to go. Currently on the daily, price is back above the cloud, just as it was the previous 2 times that were fake outs. Okay, so what's the stop loss here? The stop loss is always price closing inside of the cloud. That's the first stop loss. The second stop loss is a bearish TK cross or an opposite TK cross. Sometimes this is SVB, the weekend. Sometimes it's very noisy. Sometimes it's slow. Sometimes it happens at the same time as the bearish TK cross. Sometimes it's late, and sometimes you need to pay attention to price closing inside of the cloud. Sometimes it gets you out at the low, right? The cloud doesn't know that it's going to be the low. It's just telling you and warning you, we're breaking below support. We're breaking below support. You can use Williams fractals as a stop loss system. I have separate videos on that, but that will get you out before the cloud will. So just as you have a checklist to get into a position, you can use a checklist to get out of the position. Do we have price close inside the cloud? Do we have a bearish TK cross, in this case, coming up 3 weeks from now or whatever? And then are we closing below Williams fractals, Williams support fractals? Collectively together, that will give you the best exits on trend, period, no matter what the trading environment is. The fourth part of the checklist here, I leave off the cloud. Another common question I get, why don't you use the lagging span? Where's your lagging span? What about the lagging span? Because I'm doubling the settings, because I already am pumping these up, I'm omitting the 4th point on the checklist. Some people think this is heresy. I get it. That's fine. If you don't like that, leave it on there. Use it, right? But what you'll find most of the time is that the checklist, because of the settings, doesn't need the lagging span. The lagging span will already be on your side for many of these entries. We look here currently, it's hard to see, but the lagging span is below price, below cloud. So as far as the checklist goes, this is not an entry condition. And if you want to just simplify it, you can say, okay, 25% of my total position sizing for each point here, price above cloud 25, TK cross 25, Kumo twist 25, right? We will get a TK cross today. So that would be another add based on that system if you so choose to use that. Probably won't get the Kumo twist until a couple days down the road. And then a couple days after that, we'll probably see if we hold at this level or go higher. We will see a move of this faint green line, this one here. You'll see that move above price and above cloud. The previous 2 times we had the fake outs. We had price above cloud, we had lagging span above price and above cloud. So it didn't really help you. And that's my whole point here. If it's not really helpful in either direction, then I just leave it off. Now, again, if you like it there, if you want an additional part of the checklist, that's fine. But be careful about moving too many variables around. If you've never used this before, you definitely have to get used to that. Because the TK cross is below the cloud, this is another question I get. Does it matter where the TK cross happens? Much like the price, this is all about confidence in directionality, confidence in trend. If you see a TK cross above the cloud, just as we did down here, that is going to be the most bullish signal collectively. Price above cloud, bullish TK recross is how I refer to that. Bearish cross to bullish cross. Above the cloud, that is the single strongest bullish indication in the cloud system. Just because you see that, as we did here, does not mean immediate continuation, does not mean slam dunk 100%, does not mean 100x long. Okay, it just means more often than not, that signal results in typically higher highs. extreme higher highs, bullish continuation. And the point of this whole thing is, because the signal is so strong, are you going to really say every time you see this, I'll wait, right? I'll wait. No, that's not what this is about. This is about assuming that we are going to see continuation and just taking the trade. Your stop loss is always there. Your stop loss is the cloud, just like it was down here, just like it was here, just like it's going to be right here, which is in this case 63, or later on 60. So yes, does it knock it down a peg if the TK crosses below the cloud? A little bit. But does it say don't take the trade at all? In my opinion, no. Now, some of the cloud people might think that's heresy. Again, I don't know. But for me, it's good enough. This is about being good enough. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. territory customers by Payward Ventures Inc., PVI DBA Kraken. Another value add for Kraken Pro is that you can use timeframes for free. This is TradingView through Kraken, by the way, but you can use timeframes for free on Kraken Pro, 1 week, 3 week, 1 month, that you wouldn't necessarily be able to see or with a free TradingView account. Another question I get, how high is too high on the time frame? Depending on the speed of the market, if we look at gold versus BTC or the Qs versus BTC or WIF versus BTC, do you want to be looking at WIF using a 3-day time frame? Probably not. Those move extremely quickly. BTC is mature enough at this point where sometimes it slows way down. It slows way down for months. March through September last year, it was pointing up, but relatively we went kind of nowhere for a long time. Very similar to now, March through September, we're pointing down, we're going nowhere. Trend metrics are going to have a hard time with this on the daily for this exact reason. You will get these fake outs over and over and over. Now, again, the cloud doesn't know you're going to get that, but if at this point we are seeing that, yeah, you can bump up the time frame. You have the benefit of hindsight here, but if the market slows down, you can slow down what you're looking at. So yes, you can use this on all time frames. You can use this on the 1 hour, the 1 minute, the 15 minute. Just know that as you go down on the time frames, the confidence in the signals should go down. Sizing generally should go down. Leverage should go down. Instead, other people, typically not knowing better, they go to WIF or some market and they go on the I don't know, the 1 hour, probably lower. Let's just find WIF in here. And they start using the cloud and they start taking signals and they say, oh man, this doesn't work or whatever. And they get frustrated and they just use something else, right? This takes time. It's funny because on the 1 hour, it's actually deadly at trend here. But most of the time, for most of the alts, you will need to adjust something. Time frame, expectations, what indicators you're using. In this case, this is done really well. I'm just looking at entry and exit just based on the hourly. Here's your entry. Here's your exit. Here is your entry. Here's your exit. Here's your entry. And you're still in the trade. So that's very few signals over the past month. And if we go in a non-trending environment, if we go all the way back, and you need to look at this on multiple things. You need to look at this and understand where can this fail? How does this fail? How does this get chopped around? And you have to look at a few hundred charts, a few thousand charts. You have to spend some time with this to really understand what's going on. Sometimes you'll find on like this for WIF, maybe the hourly is actually great. Maybe it's really good at these really fast altcoins using these settings. But then again, there's periods of times where it just chops you up. So it's adjusting the microscope, adjusting the telescope, trying to fine tune those entries to get enough signal relative to the noise, depending on what you're trading, depending on market conditions. Because I guarantee you there's going to be a time when alts will be moving very fast and the cloud will be pulling you out on a low time frame of a position when it really shouldn't be. It should really just be keeping you in or keeping you out. Another thing I do with alts, like I said here, is you can use the daily. These settings all reference the daily. You can use the daily and just use 10-30, 60-30. That's basically default, slightly adjusted, because with alts, most of the time you do actually want slightly faster settings. Another way to trick the chart into seeing 10-30, 60-30 is going to the 12 hour on an alt. Depending on what you're trading, again, you need to play around with this. You need to get comfortable with looking at time frames, looking at entries and exits on multiple things. Most people trade half a dozen different things, and you need to understand what this looks like on different time frames for different assets. So that's a question I get a lot. What's the best time frame? How should I use this? You have to figure out that for you. That's a personal journey. Okay, so for me, I prefer the high time frames, daily, 8 hour, 4 hour, and it really depends. So there's no straight answer there. Another thing you'll notice, any flat level on the cloud ever is typically a be careful, watch out, we are coming back to that level. That just happened on the 3-day, this level at 49.6. This was the weekly Kijun. You'll notice these levels all talk to each other based on different time frames. So here it was on the weekly, right there, okay? I always say bids on Kijun. Now are you gonna put bids at 49 for months and months and months and months? Probably not. But as we start to break the Tenkin, that's the first warning sign on a high time frame, the blue line here, that we probably revisit the Kijun. We did. So the next level, if this fails, if this breakout fails, would be 44.8, and that's probably like a monthly Kijun at 38, monthly Tenkin at 45. So all of these levels are something else on another time frame. But what you'll notice is these flat levels are generally magnets for price. So if you can understand the very basics of this, it'll set you up for success more so than most other indicators. And I know that because I've tried and looked at almost everything. This works for me very well. I'm very visual. It's not going to work for everybody. It takes a little bit of time to understand, but you can look at any chart, any time frame, generally understand immediately what is the trend, is there a trend, what do the entries look like, what do the exits look like. That's why when I instantly see stuff like TLT, I get very, very, very excited because this is something that hasn't had an entry in years. It has been years of downtrend, and this is what you want to see on alts. You want to see something breaking above the cloud for the first time in years. That is the entry signal, and that's where people really get tripped up because they think, I'm a trader, I need to make trades, I need to take trades. No, no, no. You need to look for trades, okay? You need to find something that's worth trading. Be your own boss on what you're trading. Slow to hire, quick to fire. If something's not working out, don't be afraid to get stopped out, revisit, come back at a later time. So for the most part, that is mostly what people ask me. And again, I don't care what settings you use. It doesn't really matter to me. Use whatever you want. One last thing I'll just mention. If you're looking at crypto on legacy, so like CME futures or IBIT, BITU, BITX, MSTR, Coin, anything else crypto-related miners, I always use the legacy settings. There are fewer trading days and fewer trading hours, and that's how I justify it. Again, backtest it, see what you like, see what you don't like, but instantly looking at these legacy settings, 1852, 104, 26 for CME futures, this makes a lot of sense to me. And you should generally be able to see the trades pretty instantly. They happen usually no more than once a quarter on the daily time frame. So get in the sandbox, play around, get messy, as Miss Frizzle would say, make mistakes. And at the very least, you need to start paper trading something if you're brand new and have no idea what you're doing. And this is a great place to start. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.